Hey, everybody. Good morning. Welcome to a new episode of Stocks for Breakfast. Thank you so much for joining me today. Got a lot to talk about again today. A bunch of stocks got hammered yesterday. It looked like we had a pretty good midday reversal when the stuff in Washington was happening. And then the sellers just kind of took that grip on the market and had it roll over again. I think the biggest thing that we want to talk about today is the bigger picture and really thinking long term in wanting to learn how to, hey, Bob, good morning, wanting to really, wanting to turn this stock trading endeavor, buying stocks, selling stocks at the right time, into a way to make a living for yourself and have that security that you're the reason, you're in control. And we are constantly talking about what is the biggest part of my experience over the last 21 years, which is everything starts with managing the downside. Because if you don't understand that managing the downside is the first priority, then you're going to be chasing returns without really understanding how to last in the game. And lasting in the game means you manage the downside so you get enough experience to understand how to make money. The exciting part about that is managing the downside's actually very easy. And I think that a lot of traders take it for granted. And we kind of put it on in our email this morning about the market was so obvious for so long. We were saying that the market was on steroids and it just never had a pullback. And during that period of time, pretty much from April of 2020, it felt like you couldn't do any wrong. And it was very easy to be on the right side of the market. And a lot of people ended up building bad habits or really maybe not even a habit, because it's not a bad habit if you don't know any better. And it really came down to the concept of I don't need to use stop losses. And as soon as I hear somebody say that, I get like chills down my spine because if you've been around the market long enough and you understand that the market has, normal markets have ups and downs, you understand that stop losses are a insurance policy. They're not a bad thing. And, we talked about the language that you want to use with yourself as a stock trader, which is you want to constantly say follow through. You want to say, I found a good idea and it followed through, or I found a good idea, that particular trade didn't follow through. And it kind of resets your mind to not care in an emotional way about whether or not stocks or trades become massively profitable or go in the other direction and hit your stop loss, because you're really just running a business. So if we remember that the point of the stop loss is, number one, to preserve our inventory, which is our capital. But number two, which I think doesn't get spoken about enough when you're buying stocks, which is understanding that you need experience. And the only way to get that experience is to still be in the markets and actually using your experience to get better and better and better each month, which is really the whole point of our coaching program. Our coaching program is where I go at you and say, no, I'm going to challenge you on that because that's not what works real time. Or I'm going to say, that was awesome. You broke that down in a really big way. Actually, Simon's on the call with us today. And Simon's one of the new members of our boot camp, and he really goes deep into setting up trading ideas. Hey, Solomon's here. He goes into a really deep dive, which is the whole point of what we do in our community, because we want you to say so much more about why you should accept risk. And honestly, it seems like a little thing, but that's what separates somebody who's buying stocks profitably and somebody who's just buying stocks because they want to. And that's really what I hope to achieve when we do these videos together. So every single thing that we do here is for educational purposes. But again, I want you to make better decisions. I want you to understand the distinction between better decisions. And again, if you haven't joined the boot camp with us, the biggest way that I talk about everything is driving. If you could imagine the first time you were a driver and you think about, you're probably scared out of your mind the first time you're behind the wheel, but then after a while, you could drive 5 miles and not even realize how you got there. That's what trading should eventually get to. Now, I want to bring up a point here that somebody said, still no fear. This feels like a pullback to the 200. Well, you know what, Richard, we actually talked. That's actually a good point. It was actually the focus. Let me see if I could pull it up. It was actually the focus of our email this morning, where we spent a lot of time talking about the market feeling like we were playing musical chairs for a while. And I think a lot of experienced traders really understand that. Let me just pull this in because I want to show it to everybody. Here, let me just drop that in there. And you can see the headline here. Actually, let me, you got to pull it in to see it, right? You can see the headline over here where we talk about the market always goes up. And like I said before, I get chills up my spine when newer traders come into the community and start saying that. So glimmer of hope yesterday. The market did bounce a little bit. If we go over to the SPY and this period of time over here, intraday, you can see how we actually worked the chart. Big move to the downside. This was the original trend. Then we went parabolic to the downside. So we had to draw a new trend. What's kind of interesting here is that we actually had 3 different signals at that point. And that's usually where you sit up in your seat and you're like, oh my gosh, everything's lining up right now. People from different time frames right now are all seeing the same thing. So we had a 1, 2, 3 bottom. We had a break of the longer term downtrend. We had a break of the shorter term trend. And we had a breakout and a pullback. And the pullback held the breakout level. Everything lined up, including what happened in Washington yesterday at that particular time of day. Everything looked like we were set to start reversing and heading back up to the upside. But the grip that the chaos has on the market right now is really strong. So I want to take that a little bit deeper because I want to get into the email that we put out this morning. And it's a pretty big one. So what's going on right now is the stock market is slingshotting back in the other direction. So for as glorious as a time that we had to the upside, the market is now using that same energy, for lack of a better way of putting it, and we traded higher highs and higher lows for months and months and months. But now using those steroids that inflated the market, getting the economy back to whatever you want. Again, it doesn't matter what your opinion on that is. Using steroids has consequences. And we were basically vertical. And I talk about this to everybody in our boot camp. And, we get people asking us all the time, is now a good time to be a trader? And I'm talking about specifically during the pandemic. And when you zoom out and you look at the last 20 years of trading and you put the last 18 months in the context of whether or not this was a good time to be a trader, I don't know any other way to say it other than this was a glorious time to be a trader. It was the most amazing time to be a trader in the last 20 years. Not even a question. We were having days we couldn't even go down for 2 days. It was crazy. Crazy, but in a good way. But on the other side of that is what we just talked about. The slingshot now is going back in the other direction because the steroids wore off. And now that big pumped up guy is just a guy down the block. And now he's got to figure out, now he's got to eat natural. So now we're back to natural. Third quarter ended without the common, what people call window dressing. And just so, just to have some context on the concept of window dressing, it really comes down to the stock prices get held up, especially if there was a good quarter, and you don't see selling into the end of the month because money managers get paid bonuses based on their performance. And generally speaking, the end of the month, they're not going to be selling to push stocks down to ruin their performance, which ruins their bonus. The bigger picture in the market is kind of taken over right now. So we didn't see the traditional window dressing. Something else I want to get to, but I want to finish up this email because it's kind of important. All right. For almost a year, we played musical chairs. So somebody actually just said this. Richard actually just brought this up, which is feeling like, and this is a really experienced thing because we talk about it all the time. And I try and give everybody here on these calls a visual where if you could imagine that, your optimal entries here and your profit targets here, the distance between the two justifies taking the risk. So let's just use standard numbers. Let's say it's 3-to-1 risk reward. So if you have this, and you're like, okay, here's the entry. That's what the stock normally does. I can justify taking the risk here because the odds of me making this make it worth accepting the risk. The problem, as Richard just said, for most of that period of time, while the market was directly up, you had to have faith in buying higher highs and no pullbacks, higher highs and no pullbacks. And I'm not going to lie, it did feel a little bit sometimes where we were up 6, 7, 8 days in a row, exactly like you were playing musical chairs, which created a 1-to-1 risk reward, which makes you a break-even trader. And that's not good trading. So the whole time we're waiting for this pullback. And like, yeah, give me that pullback. Give me that pullback. Well, we got it. We waited for the pullback. We got the pullback. Stocks kept climbing. But now we got to the point where this is the dreaded quote that I started to hear as the market was pulling back. And look, I'm saying this sarcastically, but it's the truth. How's that working for you now, not having a stop loss? And here's again, the mindset, because I want to get in, I want to show you a trade from yesterday. Although it was a day trade, our community collaborated on it. And it was just one of the most amazing things to see everybody talking about it, talking through it. But there's a deeper point to that. All right. So you need to snapshot this. You need to take a picture of this. Stop loss is an insurance policy. All right. In case your entry doesn't follow through. So now here's the thing. Whether Richard's comment here is we're going all the way back to the 200, I don't know. We talked about the SPY yesterday back to the 420 level as the next big level. We talked about Fibonacci retracements and all that kind of stuff. Well, here it is. Here's the pullback we wanted. Now it's time for us to be prepared to scoop up some great swing trades and bring home the bacon. So that's where we are right now. So what I want to show you is really bringing home the point about managing risk in the context of the big picture. You absolutely have to have in your mindset, in your trading plan, in your daily tracking journal, in your daily trading game plan, you're doing this to play the long game. And to play the long game means you chicken scratch back and forth. Sometimes you have a good day. Sometimes you have small losses. Sometimes you have small profits. But you're always in the game, managing downside, looking for that head start on a winning trade. So also, that's a big thing that professional traders think. Probably something that's not talked about enough, which is we put on the first trade. You're looking to get a little bit of a head start, and then you're looking for feedback. You put on a little bit of initial trade, moves against you, you make another decision, right? But if you manage back and forth all day, all week, and let's just say over the week, because that's an easier time frame to think about. You go back and forth. One day is a small loss. The next day is a small profit, kind of going back and forth, a little frustrating, but you're not digging, this giant hole that you have to dig out of because you're just bored. Then one trade lines up. One trade can make your entire week. And if you don't think so, this is the trade that we had yesterday and the entire community walking through it just in the afternoon. Okay. That's from yesterday. That's not from January. That's not from last year. That's from yesterday. That's what it means to be prepared. That's what it means to think the long game, manage the downside. And when you're in position for one idea that follows through, all of those small losses are nothing more than running your business. Okay. So again, I want to stress this because it matters to me. I understand trading can be frustrating. I understand that buying and selling stocks could be the most amazing feeling in the world when you exit that trade and you book a profit. But that's not enough. That's not enough. The result of an individual trade is not enough. You need to understand why you made that money. You understand what were the pieces of the puzzle that went in that you can find again, replicate, and see those kind of moves. You have to ask yourself, what is the process for me to put myself in that situation, such as this? But the problem is a lot of traders only focus on the winning trades. You don't focus on all of those other trades where you did the right thing, allowing you to be net profitable on a big trade like that, as opposed to one big trade like that just getting you back to break even. Nothing sucks more than you're bored and you're trading and you're taking bigger losses. You're not managing your position size. You're like frustrated. It was so easy to trade 2 months ago. And you get a day like that, or even just one trade like that. And again, being a part of a community, we're amplifying our ideas because the community understands order flow. The community understands how to read the tape, and just one trade, the whole community lights up. There's plenty of liquidity, plenty of opportunity. And again, I'm just using this as an example. I'll just bring it back in there again, just to give you an idea. 35 to 41 and a half, a $6.50 move in a very short period of time. That's what it means to play the long game. That's what we talk about all the time in our community. We have a hashtag trade like a pro. It's thinking the long game. It's being okay with not forcing trades. It's being smart about position sizing. And then the next level after that is understanding when to size up, have more positions, and hold longer, which translates into using a profit maximizer on the upside. So again, I'm going deep into this because I want you to think about it over the weekend. I want to challenge you over the weekend to say, do I really have a process that's repeatable? Do I have a process that's predictable? Do I have a process that if there's money to be made, I'm going to make money? Not being lucky because of quantitative easing, not being lucky because of some news story out of the blue. You want to be in charge of whether or not you make money over the month. It starts with the downside being managed and then learning the upside of how to actually get paid when stuff follows through. I'm telling you, there is no better feeling in the world than managing your risk during the week, and then one or two trades kick in and you end up being profitable for the week, which could happen today. If you managed everything during the week and Friday lines up, we're actually bouncing a little bit right now. We'll look to see if we get some follow through. We'll just take a look at that right now. You can see we're actually bouncing on the 5-minute chart. We're getting a really nice push. We just reversed back to the upside, which is pretty cool. So if you manage the week and today turns into a good profitable day of trading, you could end an exhausting week of trading profitable and have the most amazing weekend because you traded like a pro. So if I give you anything, and it was actually just said before by Winnie, we spend a lot of time on the thought process of understanding how to be a professional, because a lot of people understand charts. A lot of people understand how to place the trade itself, but there's a slight difference between being a professional and being a dabbler. And I'm not saying quit your job. What I am saying is you take it seriously and you put all these pieces into the equation. All right. So I wanted to start that out because I want to challenge you this weekend to really dig deep and ask yourself, do you have a process that gives predictable results? Which means how do you manage trades that don't follow through? How do you manage trades that do follow through? And how do you find the trades in the first place? That's in your control. And I think a lot of people don't understand that. What happens after we put the trade on, that's why we say we're looking for follow through. The hard work of trading is prior to the trade, not after the trade, especially if you have a structured way of managing the downside and a structured way of what we have called the profit maximizer. At that point, you're really just like, all right, it did that. I know what to do. It did that. I know what to do. Finding the ideas is the hard part of trading, which is order flow and tape reading. All right. So what we're going to do now is we're actually going to segue into, you tell me what you're looking at today, and we'll do exactly what we did last Friday. We'll kind of do like a analysis of the ideas that you have. So two things. I'm going to challenge you to think about how much depth your trading process has over the weekend. And we'll talk about it again on Monday's Stocks for Breakfast. But right now, we're actually going to go over your ideas. So I'm going to challenge you right now. Post ideas that you're looking at, and we'll go stock by stock, and we'll do a rundown on order flow and tape and that kind of stuff. So we're going to look at that right now. Okay. So I'm actually going to pull this over. We actually had a couple of them in here. Let's take a look. I just want to see if anybody posted some ideas in here. I just want to make sure. Let's see. What's John saying? Longer term trend line from COVID sell-off now close to being breached. Yeah, John, we've been talking about that every day this week. Nobody's disagreeing with that. Let's see. Chad looking at Bitcoin, showing a clear change in order flow. You know, Bitcoin has not been able to recover from the 10,000 point drop that it had. Let's actually go out on a little bit bigger time frame. You know what? Let me pull up the continuous contract. Probably an easier one to take a look at. So this smashing over here was the big one. It hasn't been able to recover from that, but now we're actually getting a little bit of a bounce and a big bounce. So if we go into the futures contract and we take a look at what's going on here, that's a pretty big move. So if we drop this out here, and keeping in line with everything we've been talking about, this is now violated, right? So what's the violation? Again, working the charts. This is the big thing. This was the downtrend that we couldn't get through. We actually have to pay attention to support. This was a big level. Struggling to get through that level. So the terminology in your head, all right, it's struggling at that price. It's got to get through that price. But now we broke the trend, which means that we draw the line at the previous low and we draw a line at the breakout. So pretty much within the last hour or two, Bitcoin has now confirmed to move to the upside. So what would we actually be looking at? Again, I'll give Aldo in our community all the credit in the world. Aldo is our cryptocurrency guru, for lack of a better way of putting it. So now we'll be shifting immediately into Mara, shifting immediately into Riot. We'll be looking at some of the miners. Maybe we'll be looking at BT as well. Again, I'll give Aldo all the credit. He's the one who's introduced all of these different types of ways to trade Bitcoin futures and the stocks within those Bitcoin futures. Okay, so Chad, hopefully that gave you a little bit of insight there. Actually, I like that. That's some move today. Really big one. Let's see, John. Any thoughts on Apple and Amazon? We did a deep dive on Apple yesterday, and the bottom line is, if you see, we have here, Apple is now in a confirmed change of trend to the downside. So as of right now, the iPhone didn't move the needle. The Apple conference didn't move the needle. So I'm not looking to buy Apple stock right now at all, unless we break this downtrend and start heading back up. But right now, you can see we're clearly in a downtrend. It hasn't recovered with the rest of the market. This was the longer term trend that we were looking at. Right here is where we had the confirmation of a break of this trend, but that's not the new trend yet. So when you break the trend, you draw the new line higher, you draw this one, and now you're stuck in a box. It's when you get out of that box that you either validate this existing trend or you start a new one. And Apple right now has actually broken to the downside. So at best, I'd be short-term day trading it in either direction if I see order flow on those shorter time frames. Longer time frame right now, Apple's actually in a bearish environment. There's no other question about that right now. And quite frankly, if we look at a lot of the tech stocks, they haven't bounced either. If we take this a little bit further to come up with some sort of a retracement level of where we would expect to see it, we're talking about maybe just a little bit lower than where we are right now. If it breaks the 50% retracement level, it's got some move to the downside. Let's take a look at Amazon for John. Amazon, if we take a look at it on the weekly chart, you can see here pretty clearly that Amazon really hasn't done much at all. It was exciting when we broke out here and it looked like it was going to explode, but now we're kind of right back in this 1 year box. So I don't have an opinion on Amazon. It's really not doing anything. I don't know if there's any other way to say it. I mean, we're kind of stuck in this window for almost a year and 3 or 4 months. So there isn't any order flow in Amazon right now. Again, unless you're dropping down to shorter time frames and you're just looking to make shorter term trades. So there is no bias in Amazon. The way I look at things right now, it's just kind of stuck. And you can see that this was interesting, certainly, but we couldn't get out of there and stay there. So right now we're kind of just stuck here. Amazon for me right now would be a much shorter time trade. EA, oh man, Myers, have you been trading EA this week? Thing has been on fire and continued yesterday, which was just amazing. If we drop in here, the 50-period moving average looked like it was going to be resistance over here. We're like, all right, scale it up. However, something I want to bring up here, which is in the context of day trading versus swing trading. One of the most common questions we get is how do you know the difference between a stock that would make a good day trade versus a stock that makes a good swing trade? Generally speaking, if it's a swing trade, you can day trade it as long as there's liquidity. But a stock that has done what EA has done, which is amazing, we call this a bullish echo, where it's still obvious, but the odds of a profitable swing trade diminish because, again, if you can think about this as the profit target and all of that, 90% of it's already taken up, we could still day trade it like yesterday. And we actually kept talking about it yesterday in the community, how much this stock was showing amazing relative strength to the rest of the market. So EA would be a day trade for me right now, but not a swing trade for all of those reasons. It's still amazing on the upside, but as of right now, we're still just looking to day trade it. Let's see. Let's see, Chad. Do not have a process, and I know it. I benefited from too many things the last 2 years. All right. I'm really looking forward to having you in there. Look, I don't sell the boot camp hard here because I want to help. Only everybody here on the call can make a decision if you want to invest in yourself. It's not that expensive. It's only $295. But again, like Chad says here, however fast you want to go to the next level, that's completely up to you. And that's fine if you just want to stay here on these videos. But what's more important is what Chad said here is acknowledging whether you believe your process is repeatable. I'm telling you, and it might be hard for a lot of people to believe this, but when you have a process, when you have an edge that you believe works, you literally wake up every day expecting to make money because you have a process, not because of what's happening in the market. That's kind of like the backdrop. But when you have an edge and your edge is there, you're expected to make money because you put the pieces in place. By the same token, if it's hard to find, it's not there, which is your edge telling you, okay, let's dial it back a little bit, either not trade or lower position size. And that's where you expect to be profitable at the end of the month, assuming all things are traded flawlessly. So, Chad, that's a good point to bring up. It's a really good point to bring up. So we had a question about the Russell, which has been pretty interesting. And the Russell, pretty much exactly the same thing that we just talked about on Amazon. How could you possibly look at that right now and say, oh my gosh, buyers are in charge of this thing. I can't wait to join them. Not here. Not here. That is the right price. Generally speaking, when a market tops out, and this is kind of like a really advanced thing, when the market tops out and large cap stocks start to roll over, very similar to what we're seeing in Amazon and Apple and Facebook and Microsoft. Generally, what happens is large cap stocks go up, roll over, but then the small cap stocks kind of like carry that echo forward, where the market leaders aren't buyable anymore. They're not in, it's very clear that the order flow changes. So the tape is telling us not to buy those market leaders. But what happens inevitably is then most traders shift over into small caps and they start to get like this one last push. So when small caps are making a rally and market leaders are going down, that's generally the end of that move. Right now, the small, you can see here in the Russell, they're kind of in the middle of nowhere. So there's no edge here either. So again, translating all of this into what we keep talking about today, what does that tell you to do with your capital right now? It means that we're lowering position sizing, also something that's advanced. We talked about 3-to-1 risk reward. In the current market conditions, we're a little bit more inclined to maybe go after a 2-to-1 reward and then tighten up that profit maximizer. And if we can get more, awesome, but we got to take what's on the table right now. Like a big part of trading is understanding the size of the opportunity that's on the table right now. So those are kind of little things we talk about quite a bit as well. Let's see, Minvi asking about VRM. I haven't traded this one in a while myself, and I guess I can see why. It's actually making new historical lows. The only thing that I'd possibly be looking at is to see if there's any kind of volume spike in here. Over here a couple of days ago, I don't see anything to do in the stock right now. It's not something I'd be looking for myself. Let's see, get into another one. Actually, you know what? This is actually pretty interesting. Feds approve use of marijuana. Not yet. Not yet, but I can tell you that our community is watching this like a hawk every day. CGC is also another one that we're watching, and I think GRWG is the other one. I will tell you this, and we've mentioned this quite a bit. They're going down, they're going down, they're going down, but you got to watch all of a sudden when they go down, go sideways, but volume increases, something's happening in there that's not evident yet on the chart. So that's how we'll be keeping an eye on that one. JKS, bearish order flow right now. A little bit of good news. Yesterday had a pretty good day. Maybe get some follow through today. Yesterday was a pretty good day, but we can't ignore this. So again, this is really where you shift into what type of order flow am I trading? And right now you can see since the end of July, as much as we want to trade JKS, it did not bounce after earnings. Earnings was right here. And yesterday was pretty good. There was some news yesterday. It was definitely tradable yesterday. But again, if you're a regular viewer of our lessons, or if you're in the boot camp, you know that we look to see how long has smart money been buying this stock, which should translate into your position thought process. Yesterday was the first day of a potential move to the upside, but we're still fighting 2 months of selling. So that would lower your position size, get feedback on the market. And as you get pushes and pauses in your favor, you would get positive feedback on follow through, and then you would consider more. So JKS would be a little bit more of a builder position there, Joe. So that's how I'd be looking at that one for myself right now. Hey, Mike, how's it going? Good morning. ATVI. All right. Excellent breakdown. That's what we want to see. That's just a tiny portion of what we actually do when we host our game plan meetings every day, which actually I have to head over to do in a couple of minutes. ATVI sympathy play with EA, getting a little bit of a bounce. However, you can still see here again, we can't trade in a vacuum. We have to pay attention to the order flow that we're looking at right now, and that's what we have. Now, this is nice bounce off the lows, but we haven't even broke this downtrend from mid-June. So it's not getting the same type of buying pressure, but a little bit of a sympathy play over the last few days. If anything, quite honestly, it's a pause and an inside candlestick. That's a bear flag. So if anything, it's a bearish order flow right now. Let's see, Chad. HUT is the minor choice. Okay, awesome. So we talked about HUT, BT, Mara, and Riot. So if you're watching Bitcoin, if you just happen to log in now, Bitcoin rallying hard right now. So I'll just give you the rundown again. HUT was just mentioned. Mara, Riot. Mara is the one that I like trading the most, and BT would be another one to keep an eye on in there. So again, shorter term trade, Bitcoin reversing now after that support. Only 1 day of the most recent bullish buying pressure. So we stopped going down, stepped up now. Again, just to give everybody some, we don't have to pull it up. 1 day of order flow. So that should influence your position sizing. And then as it unfolds during the day, if each hour builds on itself and then each day builds on itself, your conviction level goes up. Maybe initial share size increases a little bit and you hold a little bit longer. That's the trick of putting those pieces together. And that's the experience that we want. Yeah, not BT. I know I actually did have a losing trade on that recently. It didn't follow through. Let's see. Man, bottom fishing. Raphael. Peloton's been getting hammered. A little bit of a good move yesterday. This here was short covering, and the stock has just been getting clobbered here. Now, what's interesting about this, and this is a good point to bring up. Remember how we talked about this is the profit potential? And in this case here, if you're looking to short sell, this is the potential where you'd want it to go down to. And it reaches a point where you're like, wow, most of what it normally does already happened. So now here's the difference. And I talk about this all the time because there's a difference. Again, I don't want to be fat versus I want to be healthy and fit. That's the same thing that's going on in Peloton right now. The short sale opportunity is lowered expectation for going down because of how far it's already gone, but that doesn't make it a great buying opportunity. It means the short sale is less obvious, but the buying opportunity is not obvious at all, except for yesterday. So if you decide to trade Peloton and be a buyer today, it's for two reasons. You think the downside has worn itself out, and you're going to lower your position size, putting on an initial trade, looking for feedback for it to pop up. But again, if we start out with perfect, buying that is not perfect. It's a opportunity that you need to go into with your eyes wide open and say, I'm going to lower my position size. If it follows through, I'll have a small piece and I could look to add. If it doesn't, I acknowledge it's not an awesome trade. And if it rolls against me, I have a small loss and the trade didn't follow through. All right. Let's see. Bitcoin Buck. Former boot camp participant. I said that wrong. Having the benefit of these morning exercises to execute warm me up for the day. Okay, awesome. Yeah, we go hard in our game plan meeting. I challenge everybody to get better, honestly. Let's see. AMD day trade. AMD is only a day trade right now. That stock is all over the place. Let's see. John, Netflix. Let's see. Netflix actually, one of the few stocks when we did our scans last night, Netflix actually was one of the few stocks, if not the only stock actually, that had broke out to a new 20-day high, closed above the open and closed positive and closed above the breakout level. So Netflix actually checked off a lot of stocks yesterday, as well as I just lost track, as well as relative strength to the rest of the market. So Netflix checked off a lot of boxes yesterday. Definitely want to be keeping in the list for today. Let's see. It starts with screening for the right stocks. Right, exactly. So really it comes down to you need first to put yourself in position to be in good ideas, and then you just script out how you plan to manage it. After you understand how to read order flow and read the tape, when the market opens, it doesn't matter if it's a day trade or a swing trade. That's actually the easy part, because once you're scripted out, you're like, okay, I know what I'm going to do if it moves against me from a position sizing, scale out, get out. I know what I'm going to do if it moves in my favor. I know when I'm going to use the profit maximizer. I know how I'm going to use the profit maximizer. I know which profit maximizer I'm going to use. After the trade itself is not the hard part. It's finding ideas with a high expectation of follow through. That's the challenging part of trading. All right, we're going to finish up with Kelly here. We want to make sure that we head over into I got to head out actually for our other call. CPE and EOG, 100% right now, Kelly, 100%. EOG. Okay. Oh, let me actually pull out of that. So EOG bullish gaps here, holding, staying right at the breakout level. And I think CPE is actually just a little bit stronger. CPE actually didn't pull back at all, actually pushed up and held the bid, which is actually looking pretty good. Gator, we actually just looked at Microsoft, still in a little bit of a short-term bearish order flow. Bob, Tesla, you know what? This stock, you know what the interesting thing about Tesla is right now? It's consolidating now. Two out of the last 3 days, pausing here, holding right above the breakout level. You can see here. Kathy Wood selling a lot of Tesla recently. I can't say the guy's name. Chamat, his last name starts with a P. He sold all of his Tesla recently. I don't see anything on the tape saying the tape is changing in Tesla. We're not seeing heavy volume pauses. We're seeing it push out and hold. this longer term trend that we have drawn has now accelerated. So we're actually going to redraw this line because of the parabolic move to the upside. So if anything, we're looking to see it hold this pause. If not, we're looking to find a new buying opportunity around 760. That would be the area. But as of right now, the pause in Tesla is still solid. So I don't see any reason. I don't see any change in the tape yet. We'll actually finish on this one here because I have to head over to the other meeting. SPWR actually got an here, I'll show you right here. We scroll to the bottom. And right here, this is the news on SPWR. Okay, SPWR is going into the S&P 400, and that's why the stock is actually up 9% this morning. RBC got an upgrade with a target of 88. And just to give everybody an end of week bonus, if you want, you can actually take a snapshot of that, and you can see some of the ideas that we're looking at for today. All right. Everybody, I just want you to know, again, I appreciate it. I'm very grateful that you're here with us. I hope that I'm doing a good job of really opening your eyes to the difference between chart reading and being in control and acting like a pro. So I'm going to leave you with this hashtag trade like a pro today. Have an amazing, amazing day. If you could do me a favor, hit that subscribe button. I'd really appreciate it. Share these videos with friends if you know they're in the market. That would be awesome too. And smash that like button to let YouTube know that you're finding these videos helpful. So have an awesome, awesome weekend, everybody. Have a great day of trading. And thanks so much for joining me right now. Have a great day. Take care now.